Volatility can be scary, but it's a part of the market. It's a part of every market. Like, you're going to experience volatility, so you got to know what it is. So what is volatility? Volatility is the liability to change rapidly and unpredictably, especially for the worse. This is according to Investopedia. Price pretty much changes crazy, like in a crazy manner. In the market, this change can be in either direction, up or down, or even both directions, like you can see in this, and I'll show you examples of that. Just know that it can go in both directions. Volatility can be in both directions. Volatility occurs during times of uncertainty, such as important financial news, like the red folder events in the news video. If you haven't seen this, then you'll see that in the news video that I make. But like Federal Open Markets Committee funds rates, CPI, PPI, NFP, etc. There's multiple types of news events that will come up that can cause volatility, so just know that. Also, important macroeconomic events. So like when COVID happened, that affected the macroeconomic view of the world. Like everything that deals with the economy of the world was affected by, COVID. So something like that would be a macroeconomic event. Wars is also a macroeconomic event. The Federal Reserve Chairman speeches. So the Federal Reserve Chairman, that's Chairman Jerome Powell right now. Anytime that the Federal Reserve Chairman talks, the market usually goes haywire. Like this is an example of that, and I'll get into that when I'm done with the sentence. But yeah, just knows that. And when the president speaks, those two people, the Federal Reserve Chairman and the president, those two people have heavy influence on the market. They can heavily influence the market going in one direction. If they say one thing and it's either really good or really bad, but especially when it's really bad, bro, they can drop the market like that. I'm serious. They can drop it like that. Just know whenever they're speaking, because if you don't know when they're speaking and you're in a trade and they start to speak, you're going to get fucked. I'm telling you right now, you're going to get fucked if you don't know that they are like about to speak. So just be wary of that. But yeah, so this right here, this is an example of volatility. So this was during Federal Open Markets Committee. The federal funds rate was being released on this day. Right here indicates market open, this green candle. So you see how after market opened, it was kind of just like, it was in a trading range pretty much. It was just trending in a trading range. And the overall range of the market was around 175 points. So for the whole day up until this point, because this is when the news got released, for the whole day, it was in like a 175 point range. News gets released, right? Boom. There's a doji candle. It probably has this range, this 175 point range, probably occurred during this one candle alone. But then you see how right after this candle happened, right after the funds rate was announced, then you have, a spike up. And that spike was 192 points. And it took approximately 25 minutes, because this was the low, up to this high right here. Right? So that period right there was 25 minutes, and it took 25 minutes to go 192 points, right? It took 2 hours to go 175 points earlier. See, that's an example. This is an example of a volatile time. This volatility happened in a quarter of the time, or an eighth of the time actually, of this volatility, right? So this is a volatile time. Then you extrapolate that later. So then from this high to this low right here was 447 points, right? And that move right there from this high to this low took approximately an hour and 15 minutes. So this is a very volatile time as well. So you add this volatility with this volatility, I mean, that's equivalent to about, 600 and we'll just round it up. We'll say 650 points of like trading action that occurred within, 2 hours versus the 175 points worth of trading action that occurred during these 2 hours. But with this, the volatility was up and down. Like it wasn't just a straight range of 600. It was 200 up and 450 down. That is an example of volatility. Volatility is when things are going up and down, and they're going up and down at a very fast rate compared to what price is normally, moving up and down at. So yeah, that's an example. I'll give you another example. So here's another example of volatility. You got market open right here, right? This is a market open candle. That's normal volatility for a market open candle. Then from this low to this high up here, that is a 246 point move from this point to this point. And it took approximately 1 hour, right? From that point right there, now you got from here to here. That range from this high to this low was approximately 401 points, and it took about 3.5 hours, right? 3 hours and 35 minutes. That is a big move to happen in 3 hours. Like that could be almost 2 days worth of price action in 2 hours, I mean 3 hours. That's pretty crazy. Then from this low to this high was another 428 points, and that took approximately an hour and a half. So you have, and that encapsulates the whole day, right? These three ranges pretty much encapsulate the whole day. So you have from here down to here, which is probably around like 200 points. I didn't do the volatility on that, but it's probably around 200, 220 points. And then from here to here, which is another 250 points. So if we add this move down and this move up, that's around, we're going to say 450, okay? Then from this point here down to here, that is another 400. So we were at 450, now we're at 850. Then you add from this point to this point, so you add these 428 points. So we're at 850 up to another 428. We're just going to round it up just to make it easy, 430. So now you're at, what is that, 1,280? Roughly 1,280 points that occurred during the day. It wasn't like a straight down 1,280 points or straight up 1,280 points. It was volatility moving up and down with a total of 480 or 1,280 points throughout the day. That is a really volatile day because on average, the range of a day is normally like 400 points. It'll go up and down, maybe around 400 points. And this did go up and down around 400 points, right? You see, like this was around 400 points, even though it did touch up here. So the range is actually around 428 points for the whole day, as far as like that encapsulates the top and the bottom. But within that range, you see how volatile price was? It was moving up and down. So it pretty much did that daily range 3 different times, right? Let me explain it again. From this point down to here, that's 200 points. From this point up to here, 250. From this point down to here, 400. From this point up to here, another 430. I'm estimating because I just make points easier, make the values easier. But you see what I'm talking about? How things are volatile, things are moving up and down really quickly in a short amount of time compared to what normal price action is doing. And that indicates volatility. Here's another example of volatility. So this was another federal funds rate release. And you see how during the day, this is market open and you don't see it, but this is market close. You see how during the day, during the regular market day before the news was released, because this indicates when the news was released, there was around a 200 point range, right? Price was just bouncing in a 200 point range for the whole day. Literally the moment that price gets released, that 5-minute candle, because these are 5-minute candles, that 5-minute candle indicates a 455 point range. So literally that candle doubled the daily range at that point. This one candle was 2 times what had been happening during the day already. Then from this candle right here, because this indicates, this was the low of the candle, this was the high of the candle, but it ended up closing right here. This candle was actually like a 600 point move because it touched here, went to touch up there, right? And that's 455 points from this point to this point. But then after touching up there, it came down to touch here. And that's around a 200 point drop from this point to this point. So it was really like a 655 point candle. This one candle right here, right? Which, that is some volatile shit. That's a scary point to see. Like, if you're trading this, you gotta be on point. Otherwise, you're losing a lot of money. That's why it can be very scary to trade during volatile times. And if you're going to trade during volatile times, you got to trade very, very small because you can blow an account really easily during a volatile time. So then we're going to continue with this example. From this point right here, price came down because that was the close of the candle, right? This was a bullish candle. That was the close of the candle. Price came down to touch right here. So from this is around what? 41,800. It came down to touch down here, which is around 41,600. So it dropped 200 points just to go up another 200 to 300 points to eventually come down another 400 points, right? From this high to this low. And that 440 point move took about an hour and a half to happen, right? So you see how much volatility is occurring during this. I mean, this was at 11 and this is at 1, right? So in 2 hours, you have all of this move. That is volatile. All this price action, That is volatility. That is really hard to trade, but you got to be accustomed and know that times like this in the market are going to happen. They don't happen every day. They don't even happen every week, but it's almost guaranteed at least once a month, potentially a couple times a month, something like this is going to happen, especially on days like the federal fund rate like release or NFP, which is non-farm payroll. Stuff like that is going to make the market go crazy, make it really volatile. Or when the president speaks, like I said, it's gonna make it really volatile. Just remember that. So that's just a couple of quick examples of volatility. And whenever I'm actually showing you like on the chart, on the trading view, whenever I'm going through charts, I'll show you volatility and you'll be able to see more examples of this. But this is just a basic example of what volatility is and like how crazy things can be during volatile times. But yes, volatility is a part of the game. And you have to be okay with volatility and understand what it is whenever it comes. So that's volatility.
Hey, what's going on, y'all? I just want to give you guys like just a little update because I didn't mention this in the video. I am releasing my full day trading course, or just like candlestick reading course, on YouTube, like the full thing. I did it a while back and I just want to release it for everybody to have because I feel like it's really useful information right now that like everybody can benefit from if they want to understand markets, like basic knowledge of markets, and it will help you so much. I'm releasing the full course on YouTube. There's going to be a playlist in the description, so just check that out, and it's going to be everything releasing over the next month and a half or so. And like I said, it's going to be everything you need to understand the basic knowledge of, you know, the market and understanding candlesticks, because with this knowledge you will be able to read any market as long as you can see a candlestick chart for that market. It doesn't matter whether it's a stock chart, whether you're trying to trade like Amazon or Tesla or something like that. It doesn't matter whether it's a Forex chart, whether you're trying to trade, you know, euro versus the dollar or British pound versus the dollar. It doesn't matter if you're trying to trade gold. It doesn't matter if you're trying to trade silver. It doesn't matter whether you're trying to trade Bitcoin, XRP, Ethereum, fucking corn, wheat, oil. It does not matter. As long as you have a candlestick chart that you can read, this information will, in my opinion, benefit you in a very great way. So if you want to learn more, just check out the free course. And like I said, everything is there. It's the full thing that I made. It's like over 18 hours long. You don't have to watch the whole 18 hours. It's whatever you want to do. But I'm putting it all out there for you. So if you want to watch it, then cool. It's going to be out there. Just check the playlist underneath in the description. And yeah, hope you guys enjoy. And hope you guys are having a great day. Back to the video.